Happy Tuesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Tuesday, December 26, 2023. Hope everyone had a wonderful Christmas holiday and Hanukkah, all that good stuff. Kwanzaa, anything you guys support, we support here over at 42 Macro. It was just a wonderful holiday weekend. Got to spend some time with some fam, got to do some healing, some laughing, some gifting, some eating, all that good stuff. So I hope everyone had enjoyed that with their respective families and friends. So we'll start with our executive summary here. In terms of our leadoff morning note, as always, if you want the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So starting with number one, U.S. home price inflation, as measured by the FIFA and Case-Shiller indices, slowed to a still above trend rate in October, thanks to the 18 to 20-month lag between home price inflation dynamics and reported shelter inflation. Core CPI and core PCE are likely to slow faster over the next 2 quarters to account for the sharp deceleration in HPI throughout the 2Q22 to 3Q22 period. That outcome would be supportive of the soft landing scenario underpinning the Goldilocks top-down market regime. Number two, when we analyze the U.S. housing market from a GDP perspective, we continue to observe supportive credit cycle dynamics for the new home market. Indeed, the new home market is where all the growth in supply and demand has come from in recent quarters. And then lastly, number three, the U.S. housing sector continues to be supported by favorable supply-side dynamics, which itself supports the soft landing scenario. It can be argued the U.S. housing sector experienced its own mini recession and is likely to continue recovering in the months ahead, thanks to the dramatic improvement in financial conditions over the past 2 months. Transitioning to my 42 macro dashboard this morning, no key macro market indicators overbought, oversold this morning, so we'll leave you with some levels for the S&P here. We're kind of right in the middle of the range, more or less, with a downside to about 46.21, upside to about 49.22. So be aware of that. Continue to generally trading kind of in the upper half of the range there. This is exactly what you would expect given the short-term and bullish short-term and medium-term price momentum. Transitioning to our 42 macro rare community, just reading the question here from one of our subscribers asking about, are there any other insights to be gleaned from the dispersion model? So I'll read the question. Hi, Skipper. Apart from the aggregated data across cyclical and defensives being a possible leading indicator of a phase transition, can the data for individual sector and style factors in the dispersion model be used in conjunction with the discretionary investment ideas summary to provide a read on the risk taking or maintaining a suggested action, which is featured in the discretionary ideas summary? I am thinking of the ancillary benefits mentioned in the glossary explanation of the dispersion model, and if they can be used to confirm or disconfirm a discretionary investment idea action. So the answer there is yes. They can. Obviously, all of our models can be used to confirm or disconfirm, sort of certain outcomes on an ex-ante basis in financial markets. But generally speaking, in terms of our, specifically how to think about the various models that we use from a quantitative risk management signaling perspective, we generally want the models to do what they're best at. I liken this to a football team where, you don't want offensive linemen running down the field trying to catch passes in so much as you don't want wide receivers and, trying to block 300-pound defensive linemen. Generally speaking, there's a specificity. The models are designed to do one or small collection of things very well. And that's why we build those tools. And then we build other tools to do one or a small collection of things very well as well. And one of the things that the dispersion model is designed to do is help investors understand where flows into cyclical and or defensive sectors and style factors become too extreme, and you tend to get these big violent factor reversals that tend to blow people up on the buy side. So that's why we continue to refresh that model 6 days a week and report the output therein. Conversely, the discretionary investment ideas summary is designed to take into account the current top-down market regime and sort of explain what that means for each individual factor exposure across global macro, whether it be equity sectors, credit sectors, currencies, commodities, et cetera. It's designed to take into account what the current top-down market regime implies for each of those particular assets, and then it adds a secondary layer of the assets momentum vis-a-vis our volatility adjusted momentum signal, and the assets short-term momentum vis-a-vis the relative strength index. And what that model ultimately designs to do ultimately does for investors is ultimately tells them what to do across each of those factor exposures, again, based on what the current market regime is, what the momentum in the indicator is, and ultimately where, if the indicator is overbought or oversold. So there's a lot of information there. But again, that model is not designed to tell you whether or not there's a big factor reversal coming on the precipice. That's what the other models do, namely our global macro risk matrix, the dispersion model, the weather model, etc. So you can kind of, in summary, you can piece those tools together to create a more holistic view of the markets. But just understand that you don't need to do that, because if you only use the tool for what the tool is designed to do, the tool will produce superior and positive results for you. So we'll wrap it up there. Darius Dale presenting our macro minute for Tuesday, December 26, 2023. Best of luck out there today. We'll catch you back here tomorrow. Everyone have a wonderful day, and hopefully you're having a great holiday season. Cheers.